Welcome to today's Where's the Trade? My name is Joshua Bellinger of OptionCentral.com, and today we're going to look at Bunge Limited. One of the scans that I always like to look at each and every day is stocks that are hitting 52-week highs and seeing ones that are seeing call buying on the back end of that. So today, Bunge Limited, we're seeing some unusual call buying in a contract we'll take a look at in a second, but let's take a look here at the chart. So one of the things that I like about this chart here is that we have a nice defined trend. This is on the daily chart, but you could see here all the way from 57, we've gone from 75 from June to current, and it's been following this decent trend here. It's a upwards trend and so forth that we could easily follow. Now let's back this out to a 2-year chart. And we are actually, and let's go a little bit further here. Let's look at a 5-year because of what the contract that we're looking at is a January contract of the option activity. But what we want to look at is where resistance is going to be at. And so you can see that the decline here from the 08 going into 09, we come from 120 all the way to 30. And from then, it has taken a long time to repair. So you can visually see this as a support level here. And as we get into 90, 90 is going to be a resistance level. And then potentially, if it gets above that, it could see a movement into 100. Let's take a look at the options today. And we'll just close all these down because the option contract that stood out with the option activity was in the January 2014. And you could see here that the 85 contract traded 2,700 times. And if we look here in the time and sales on Thinkorswim, you could see that a block of 1,200 traded when the market was 160 by 170, traded on the offer, pushing implied volatility higher, and that it was bought. And you could see from then some more action came in. And if you look down here, you could see smaller blocks of those buyers. So with that, what do we look at is that there's a bullish bias longer term. We have 368 days to go, and that there is a decent amount of money behind the strike with the current open interest of 1,000. You could still see over the next few months people averaging into this contract, but this is a pretty big sum of money going in here. And looking at where prices could potentially go to 90, that is where you want to look at and see a level of, at least on the monthly basis, to sell into or take profits in. If you buy, potentially waiting for a little bit of a dip or keeping it in mind because we do have earnings coming up here. Here's what I would like for you to do now. Make sure you click subscribe if you haven't. If you like the video, give it a thumbs up. If you don't, give it a thumbs down. Leave a comment below. Tell me why you liked it, why you did not like it. And if you found the information to be valuable and you think that there's someone else out there that you know that could use the information or find the information valuable, make sure you click the share icon here and share the video with them.